I'm Pat Keon, Senior Research Analyst with Lipper. I'm here to speak to you about the fund flows activity for the week ended Wednesday, July 10th. Let's start this week's report by taking a quick look at the week's market activity. Equity markets rallied at the end of the trading week on indications that the Federal Reserve would follow through on its recent dovish turn on interest rates. Overall for the week, the NASDAQ Composite Index was up 0.4%, while the Dow Jones Industrial Average and the S&P 500 Index finished down 0.39% and 0.09% respectively. All the indices experienced significant one-day increases on Wednesday, July 10th, after comments from Fed Chairman Jerome Powell. Powell stated that uncertainties around global growth and trade continue to weigh on the outlook. The Street took this as a signal that the Fed would lower rates at its next July policy meeting, as the Fed had previously suggested rate cuts were a tool that could be used if the economic environment did not improve. Markets rallied after this statement, as the NASDAQ, S&P, and Dow finished the day up 0.8%, 0.5%, and 0.3% respectively. Let's turn our attention back now to the fund flows activity. We'll start by taking a look at the weekly results for our fund macro groups. Equity mutual funds suffered net outflows of $3.3 billion this week. Taxable bond funds took in $1.6 billion in net new money. Muni bond funds grew their coffers by $885 million, and money market funds had net inflows just shy of $28 billion this week. We'll now take a closer look at each one of these asset groups, starting with the equity mutual fund group. The $3.3 billion in net negative flow marked the group's 21st straight weekly net outflow. In the continuation of the long-term trend, domestic equity funds were responsible for the majority of these net outflows, as they saw $2.6 billion leave. For comparative purposes, non-domestic equity mutual funds had net outflows just shy of $700 million. We'll take a look at the equity ETF group now. Conversely to mutual funds, this group took in net new money, $4.3 billion this week. Most of it going to the Spider S&P 500, which had $3.7 billion in net new money. On the flip side, we saw the Invesco Russell 1000 Dynamic Multi-Factor ETF had about $694 million leave their coffers. The next asset group to take a look at now is taxable bond funds. We'll start with the mutual fund side of things. They took in net new money last week. They had net inflows of $1.6 billion. It was the group's fourth straight week of net inflows. The Fed signaling that they would cut rates was a positive factor for this group, with the biggest beneficiaries being two intermediate investment-grade debt peer groups, as core plus bond funds and core bond funds had positive net flows of $523 million and $485 million respectively. We'll move on to the ETF side of taxable bonds now. As you would expect, they also benefit from the Fed news, as they had net inflows of $471 million. This was the group's ninth straight positive weekly net inflow. The largest net inflows belong to the iShares iBoxx Dollar Investment Grade Corporate ETF. That should have been the iShares iBoxx Dollar Investment Grade High Yield ETF, as well as the iShares MBS ETF, which took in $642 million and $560 million respectively. On the flip side, another iShares product, this time it's the iShares iBoxx Dollar Investment Grade Corporate ETF, had the largest net outflow by far at $840 million. We'll move on to our next group now, which is muni debt funds. Muni debt mutual funds continued their positive run with net inflows of $885 million last week. This was the group's 27th straight weekly net inflow for a total intake of just over $30 billion. This is the group's best run since the 54 consecutive increases between Q3 2015 and Q3 2016. The largest contributors to this week's gains were the high yield muni debt and the general muni debt peer groups, which took in $320 million and $286 million respectively. The last group to take a look at is our money market funds. Money markets took in almost $28 billion in net new money last week. It was the third straight weekly net inflow for the group, during which time they've taken in about $76 billion. All the money market peer groups were on the plus side this week, led by the institutional U.S. government money market funds and the institutional U.S. Treasury money market funds, which were up $11.7 billion and $7.4 billion respectively. That wraps up this week's report. If you would like to take a closer look at the data for yourself, please go to our website at www.lipperusfundflows.com, and please join us here again next week where another one of our analysts will be speaking about that week's fund flows activity.